Did you know that the UK is currently facing one of the worst economic crises in decades, and most people have no idea how bad it's about to get? In fact, 40% of UK households are now just one paycheck away from financial disaster. The country's debt levels are rising at an alarming rate, and inflation is eating away at your savings. But what's even more shocking is that these issues are only the tip of the iceberg. Imagine waking up tomorrow to find that your wages are worth less than they were the day before, or that house prices are so high you'll never own a home. Or picture a future where pension funds are barely enough to get by, leaving you to rely on a government safety net that might not even exist. Sounds like a nightmare, right? Well, this is exactly the reality the UK is heading towards, and it's happening faster than most people realise. From stagnating wages to soaring housing prices, a weak pound to political instability, the perfect storm is already brewing. If you're not already worried about your financial future, you should be. In this video, we'll break down the 10 major reasons why the UK's economy is on the brink of collapse, and what you can do to prepare for what's coming. This isn't just another doom and gloom story, it's a wake-up call you can't afford to miss. Stay tuned, because the truth is far more shocking than you think. Number 1. Stagnating wage growth. The UK has been grappling with stagnating wage growth for over a decade, and it's becoming one of the most significant contributors to the economic strain on households. Despite inflation constantly rising, wages have not kept pace, meaning workers are taking home less in real terms. In fact, recent data reveals that average wage growth has barely exceeded the rate of inflation, leading to a significant decrease in purchasing power. This stagnant wage growth is impacting everyday life. The cost of basic necessities like food, transportation, and healthcare is growing, while wages remain virtually the same. As prices soar, families are feeling the pinch, especially those in low-income brackets. A direct result of this is increased financial stress, as individuals struggle to meet their needs without going into debt. For many, the situation is becoming more unsustainable. More people are relying on credit cards or loans just to make ends meet, further compounding the financial pressure. And the longer wages stay stagnant, the deeper the economic inequality becomes. The rich get richer, while the majority of workers face increasing difficulty maintaining their standard of living. What's even more concerning is that without significant policy changes or interventions, this trend is likely to continue. The UK is heading toward a future crisis where the gap between income growth and living costs continues to widen, making it harder for everyday workers to keep up. To navigate these tough times, individuals may need to look into diversifying their income, upskilling, or even reconsidering their spending habits to better weather the storm ahead. Number 2. Soaring housing prices. The housing market in the UK has become one of the most unstable and unaffordable sectors of the economy, contributing significantly to the looming economic crisis. Over the past several years, house prices have skyrocketed, leaving many first-time buyers and renters with little hope of entering the market. The average home price has increased at a rate that far outpaces average wage growth, making it impossible for young people and low-income households to buy homes. As house prices continue to rise, so does the cost of renting. With limited housing supply, renters are seeing their monthly expenses climb steadily, while landlords capitalise on the situation by charging higher rents. This has left many struggling to cover the basics, with some forced to spend over half of their income just to keep a roof over their heads. This housing crisis also contributes to increased social inequality, as wealthier individuals can continue to invest in properties, benefiting from rising prices, while others are left behind. The dream of home ownership seems to be fading for a generation, and this creates a deep sense of frustration and uncertainty. What's worse is that the situation could be further exacerbated by the lack of affordable housing solutions from the government. There is a growing need for action to address the housing affordability issue. Without intervention, the housing market will continue to push people further into debt, exacerbating the financial burden and deepening the crisis for many UK families. For those trying to navigate this unaffordable reality, downsizing, relocating to areas with lower property prices, or seeking government assistance may be necessary steps to weather the housing storm. Number 3. Rising inflation. Inflation in the UK is climbing at an alarming rate, and it's becoming one of the biggest threats to financial stability for millions of households. Over the past few years, the cost of living has increased significantly, with prices for everyday goods like groceries, energy bills, and transportation soaring. However, wages have not kept pace with these rising costs, leaving many families struggling to make ends meet. The effects of high inflation are felt most keenly by those with fixed incomes, such as pensioners and low-wage workers, who find their purchasing power steadily shrinking. For example, items that once seemed affordable are now out of reach, with prices on basic food items rising faster than ever. This inflationary pressure erodes savings as well, as money in the bank loses value over time. For many people, the dream of building a secure financial future feels like a distant hope when their savings accounts are steadily declining in real value. Investment options that once provided a safe return, such as bonds or savings accounts, now struggle to keep up with inflation rates. The Bank of England has raised interest rates in an attempt to control inflation, but this has led to higher mortgage and loan repayments, further burdening consumers. As a result, households are faced with a choice between paying for essentials or saving for the future. To cope with rising inflation, it's crucial to reevaluate your financial strategy. Look into inflation-proof investments, consider cutting unnecessary spending, and explore ways to generate additional income to protect your financial security. Without action, the effects of inflation will continue to spiral, leaving many vulnerable. Number 4. Debt crisis. The rising debt levels in the UK are becoming one of the most pressing issues facing the economy. Both national and household debt have reached unsustainable levels, placing a significant strain on the financial system and everyday citizens. Personal debt, in particular, has exploded over recent years, with credit card balances, loans, and payday lending becoming increasingly common for families trying to cover basic expenses. Many individuals are relying on credit to maintain their lifestyles as wages stagnate and the cost of living continues to rise. This means more people are accumulating high-interest debt, which compounds over time, leading to a vicious cycle of borrowing to pay off previous debts. For those struggling with multiple credit sources, this debt spiral can be overwhelming and often results in mounting stress and anxiety. On a national level, the UK government's growing national debt is also a cause for concern. While borrowing is necessary for funding public services and infrastructure projects, the increasing debt burden is creating long-term economic instability. This can lead to higher taxes and austerity measures, which ultimately affect the public's welfare. Moreover, the cost of servicing this debt takes away from essential investments in key sectors like healthcare, education, and infrastructure. Individuals must take action to reduce their personal debt load to avoid financial ruin. Strategies such as debt consolidation, cutting unnecessary expenses, and focusing on building an emergency fund are crucial steps toward regaining control over finances. Additionally, the government must take decisive action to manage national debt responsibly to avoid future economic turmoil. Without addressing this mounting debt, the UK will face long-term consequences. Number 5. Weak pound. Sterling. The weakening pound sterling is one of the most critical factors contributing to the UK's economic challenges. Over the past few years, the pound has significantly lost value against major global currencies, and this decline is beginning to have far-reaching consequences for the UK economy. As the pound weakens, the cost of imported goods rises, which directly impacts the prices of food, fuel, and everyday products that the UK relies on. The effects are particularly noticeable in sectors like energy, where the UK imports a large portion of its oil and gas. A weaker pound also makes international travel more expensive, as it takes more pounds to buy foreign currencies. For many Britons, this means that vacations abroad and business trips are becoming financially out of reach. The UK's tourism industry, which relies on foreign visitors, also suffers, as a weaker pound makes the country a less attractive destination for international tourists. For businesses, the weakening pound can be a double-edged sword. While exporters may benefit from a more competitive exchange rate, allowing them to sell goods more cheaply abroad, the increased cost of imported raw materials and goods cuts into their profit margins. This can lead to higher prices for consumers, further exacerbating the cost of living crisis. The devaluation of the pound is also a sign of broader economic instability, as it reflects a lack of investor confidence in the UK economy. If the trend continues, the UK could face even more financial uncertainty, with rising inflation and shrinking economic growth. The weakening pound is another reminder of the economic challenges on the horizon, pushing many families into financial difficulty. Number 6. Global economic uncertainty. The UK's economy is heavily influenced by global economic trends, and recent events have created an environment of increasing uncertainty. Factors such as global trade tensions, supply chain disruptions, and fluctuating commodity prices are having a direct impact on the UK's economic stability. As the world's interconnectedness grows, any instability in key regions, such as Europe, Asia, or North America, can send shockwaves through the UK economy, affecting everything from consumer prices to business operations. One of the most significant risks comes from Brexit and the ongoing trade negotiations with the European Union and other countries. With new barriers to trade, UK businesses face higher tariffs and longer delays, which make it more difficult and expensive to import and export goods. This not only hampers economic growth, but also disrupts the supply of essential goods like food and medicine. As a result, consumers are left to deal with higher prices and scarcity of items they rely on daily. Furthermore, global geopolitical tensions, such as the ongoing trade disputes between China and the US, create even more economic uncertainty. When tensions rise, global markets can become volatile, impacting investment flows, currency values, and international trade. The UK's reliance on global markets means that any global financial downturn can lead to reduced economic output, higher unemployment, and lower living standards for its citizens. This global uncertainty makes it harder for businesses to plan for the future, as they face unpredictable costs and market volatility. For individuals, this means that the economic challenges could worsen as global factors continue to affect the UK economy. Number 7. Underinvestment in infrastructure. The UK's infrastructure is facing a severe crisis, with decades of underinvestment taking a toll on the nation's long-term economic prospects. Key sectors, such as transportation, energy, and healthcare, are in desperate need of upgrades, yet the lack of adequate funding and strategic planning has left the country with outdated systems that are increasingly inefficient. The failure to invest in essential infrastructure has widespread consequences, from increased costs to slower economic growth and diminished quality of life for citizens. One of the most pressing concerns is the state of the UK's transport networks. Overcrowded rail systems, crumbling roads, and inefficient public transport are making daily commutes longer, more expensive, and less reliable. This inefficiency not only wastes time, but also increases business costs as workers and goods are delayed. The lack of modern infrastructure also harms the country's ability to remain competitive in a global market. Businesses require smooth, fast connections to function efficiently, and the UK's lagging infrastructure hampers their operations. Additionally, energy infrastructure is another area that is woefully underfunded. As the world shifts toward renewable energy, the UK's reliance on aging fossil fuel power plants and a strained national grid becomes a serious issue. This leaves the country vulnerable to energy shortages, rising prices, and power outages, which could disrupt industries and everyday life. The government must prioritise the revitalisation of the UK's infrastructure to support sustainable growth. Without immediate action to address these deficiencies, the economy will continue to suffer from inefficiency, higher costs, and a lack of global competitiveness. The longer this underinvestment continues, the more difficult it will be to recover. Number 8. Pension shortfalls. The UK's pension system is facing a significant shortfall, and millions of citizens are at risk of having insufficient funds for retirement. For years, individuals have been saving into pension plans, but the reality is that many of these plans are severely underfunded or fail to provide enough for a comfortable future. The state pension, in particular, is proving to be inadequate, as its payments have failed to keep pace with the rising cost of living and inflation, leaving many retirees struggling financially. The lack of sufficient savings is partly due to low pension contributions, with many workers failing to set aside enough for the future. Even those with private pensions are facing challenges, as stock market volatility, low interest rates, and poor investment returns have led to lower than expected payouts. This trend is particularly concerning for younger generations who, due to a combination of rising housing costs, stagnant wages, and financial instability, are not saving enough for retirement. Without significant adjustments to how pensions are managed and funded, these individuals face the possibility of living in poverty or financial insecurity in their later years. The reality of pension shortfalls is a growing burden on the UK's social safety nets as well. As the population ages, the number of people relying on state benefits increases, putting more strain on public finances. This trend can lead to further tax increases or austerity measures in the future, making it even harder for people to save and retire comfortably. Individuals must begin to take control of their financial futures by increasing pension contributions, seeking financial advice, and considering alternative savings plans to ensure a more secure retirement. The time to act is now before it's too late. Number 9. Political instability. Political instability in the UK is a growing concern, as frequent changes in leadership, shifting policies, and a lack of consensus on key economic issues create an environment of uncertainty. The UK's political climate has become increasingly divided, with deep ideological rifts between political parties, making it difficult to implement long-term economic strategies that ensure stability. The aftermath of Brexit, coupled with ongoing debates over trade deals, taxation, and public spending, has left the country in a state of perpetual flux. The frequent changes in leadership and policy direction contribute to a lack of confidence among investors and businesses. When the government is unable to present a united front or provide a clear path forward, it deters investment and economic growth. Business owners are hesitant to make major investments or expand operations, fearing that political shifts could result in policies that adversely affect their profitability. This hesitation leads to slower economic recovery, job insecurity, and reduced innovation. Furthermore, political instability exacerbates issues such as inflation, national debt, and social inequality. With a lack of effective governance, policies to address these critical issues are delayed or watered down, making the problems more difficult to solve over time. The resulting economic stagnation impacts the everyday lives of citizens as they face higher costs, lower wages, and fewer job opportunities. The UK needs political cohesion and strong leadership to navigate through the turbulent times ahead. Without a stable political environment that prioritises economic growth, public welfare, and long-term sustainability, the country's ability to address its mounting economic challenges will continue to weaken, leaving the population vulnerable to further hardship. Number 10. Decreased consumer confidence. One of the most alarming signs of an impending economic crisis in the UK is the dramatic decline in consumer confidence. As people become increasingly concerned about their financial future, they are cutting back on spending, opting for more cautious approaches to budgeting. This shift in behaviour is directly linked to economic uncertainty, rising costs, and the looming threat of an unstable economy. When consumers feel uncertain, they hold back on purchasing both essential and non-essential items, which directly affects businesses and the broader economy. Recent surveys reveal that a growing number of consumers are feeling pessimistic about their economic outlook. As inflation drives up prices, many individuals are tightening their belts and choosing to save rather than spend. For businesses, this lack of spending signals lower profits, which can lead to layoffs, reduced investments, and even store closures. The ripple effect is felt across all industries, from retail to services, contributing to a slowdown in economic growth. The reduction in consumer spending also impacts the housing market and real estate, with many people postponing major purchases, such as buying homes or investing in long-term assets. Property prices could be further depressed, creating even more instability. Additionally, the drop in consumer confidence affects investor behaviour, as concerns about future demand for goods and services may cause stocks to fall and market volatility to rise. The impact of low consumer confidence is not just theoretical, it's something that families and businesses are experiencing now. As this pessimism continues to grow, the UK economy faces further challenges, and recovery may become even more difficult to achieve. The UK is heading toward a massive economic crisis, and the warning signs are all around us. The issues we've discussed today, stagnating wages, rising debt, soaring housing prices, and more are just the beginning. Now is the time to take control of your financial future before it's too late. What are your thoughts on the state of the UK economy? Are you feeling the effects of these challenges in your own life? Let us know in the comments below. We genuinely want to hear your opinions and experiences. We put a lot of effort into bringing you the most up-to-date, insightful content, and your feedback really helps us improve. If you found this video helpful, don't forget to subscribe to our channel. It's just one click, and it helps us continue making content that matters to you. You won't want to miss what's coming next, so make sure you're subscribed to stay ahead of the curve. Thanks for watching and stay prepared.